So we are live now.
Okay. Good afternoon, everybody. Welcome to this special midweek market outlook webinar. I am Devarsh and I am joined by my colleague Nagaraj. Good afternoon, Nagaraj.
Good afternoon. Hello, everyone. Welcome to Midweek Market Outlook webinar.
All right. So, US markets finished lower yesterday, and it was one of the longest losing streak for Dow since 1978 February. Continuously, last 9 sessions, it is coming down gradually. Most of the market participants are now expecting that the US FOMC will cut interest rate by 25 basis points later today in the evening session in the US markets. And after that, what will be the outlook for interest rates since Donald Trump is proposing a lot of policies which may rekindle inflation? So that is the worry market has. Our market also, we had a session where markets weakened and they closed below some crucial supports. The levels my colleague Nagaraj will share. So, what is the outlook for the short term? We will try to gather that from the charts. Uh, Whatever we have here right now, we have to keep in mind that the a large important event, which is FOMC meeting, is scheduled today in the evening, and we have a expiry, the weekly expiry of Nifty options tomorrow. Last couple of expiries, like 5th of December, we saw very wide volatility on Nifty expiry day. Then on 13th of December, on Sensex expiry also, we witnessed a very sharp session. So last couple of expiries of Nifty or bank or the Sensex have been very volatile and very large range movements we have seen intraday. So that is coupled with the FOMC announcement. Tomorrow is going to be very interesting session, very volatile session. So we have to be very careful for tomorrow. Shorter term levels, my colleague Nagaraj will share with you. Over to you, Nagaraj. Can you please show the charts and tell us where we are headed?
Thank you, Devash bhai. Just I will share the chart. Is my chart visible?
Yes, go ahead.
Okay. Hello, friends. Good afternoon and welcome to this mid-market outlook webinar. Before starting this discussion, we'll step by step we'll discuss on the Nifty intraday chart, daily, weekly, and broader market indices and other sectors. We'll discuss in detail and we'll see how the things have panned out over the 3 sessions. What is the outlook of the Nifty? To start with, from a smaller time frame, friends, this is the intraday chart. What we can observe is last 3 sessions, in fact, Nifty has been in a continuous downtrend. And even though that weakness was not sharper, that long range negative candle is absent, but market has been in continuously coming down, showing some consolidation at the lower level. But the upside bounces, intraday upside bounces, is not able to sustain because these are the long upper shadows are indicating the failed upside bounces in the during the decline. And whenever the Nifty made an attempt to move up during intraday, has showed witnessed a sell on rise opportunity. Friends, this is a daily chart. What we can observe after a spectacular upside bounces from the lower levels on 13th of December, market erased the whole gain made on that day and closed lower. We have mentioned the lower support in our last weekly around 24,200 levels. Now placed at the edge of 24,200 levels. In fact, it has broken slightly below that and closed around that support. But tomorrow is the event and lined up in the US, and the outcome of the event will have a certain impact on the Indian market as well. But on the technically, market is at the place at the verge of breaking below this 24,200 odd level. This 24,200 is also a neckline of the bullish head and shoulder pattern. Friends, this is the pattern that formed. It is the head, left shoulder, and the right shoulder. After the upside breakout of this pattern on the neckline, market has failed to continue with the sustainable upside momentum. It later shifted into a range movement with high volatility, now coming down. Friends, this 24,200 is going to be crucial. I think the way market has closed at the lower levels, we hope that this 200 is unlikely to hold for long, and Nifty could come down. On the lower levels, the next support lies in around 900. Friend, this 24,000 to 23,900 is significant because on 25th of November, we have seen some good formation of opening upside gap, and market sustained for 3 sessions after opening the with the upside gap. And on 20th November, it has filled the gap. So after that, after the filling gap, after the decline of 300 odd points on 28th November, Nifty straight away moved up for 4 5 sessions and almost gained around 1,000 points. Not exactly, slightly below the 1,000 point. So around 1,000 points from the low of 28th of around 23,873 to the high of 5th of December around 24,857. Almost 950 odd points regained. And after that, market shifted into consolidation and finally declined. So once it breaks below this head and shoulder, inverted head and shoulder neckline as well as the support, then I'm expecting this 24,000 to 23,900 is going to act as a strong support, because we have seen some market witnessing some decent around 950 points upside bounces from that gap support. And I believe that if Nifty slide down to that 24,900, sorry, 23,900, 24,000 area, then there is a higher possibility of Nifty showing upside bounces from the lower levels. This is on the daily chart. If you look at friends, weekly chart, after a sustainable upside bounce last 3 weeks, 3 4 weeks, Nifty slipped into decline. The week is not over. 1 or 2 more days to wait for the weekly close. Last week, the 24,200 has acted as a support. Nifty recovered on the intra-week basis from the lower level. This week, we have to see currently close at the 24,200 levels. There is a higher chances of Nifty breaking below this level and enter into a important support zone. Friends, on the monthly, nothing is cleared because market has placed at the long-term trend line support, made an attempt to move up, still showing consolidation on the long-term chart. But on the long-term chart, intermediate trend remains intact for the Nifty. But we have to see how things pan out on the small time frame. Friends, on the Bank Nifty, if you look at after showing a consolidation range movement, Bank Nifty has declined sharply over the last couple of sessions, and currently placed around the support of around 51,500, which is the gap area around 51,300 to 500 area is going to be an important support zone, because after the opening upside gap of 25th November, Bank Nifty continued to move up. Even though Nifty has filled the gap on subsequently on the 20th November, but the Bank Nifty maintained its gap and moved up from there on. So I believe that 51,300 to 51,400 or 500 level is going to be important support for Bank Nifty. At the lower level, I'm expecting the sizable upside bounce if Bank Nifty comes down in the near term. So, friends, next is the broader market indices. What we have been, it has been moving significantly from the lower levels. If you look at the microcap first one, the microcap was moving in 17, 18 sessions, afterwards declined, again bounced back from the lower levels, currently again showing weakness. So around the new highs of around 26,400, 500 levels acting as a strong resistance for the microcap. And the overall chart pattern looks like there is a short-term correction is due for this sector. Second, if you look at the mid-cap, friends, mid-cap, the similar story lies. It has not moved up to its new all-time highs, but around 59,600, 700 levels acting as a strong resistance as of now. And this mid-cap is not able to sustain above this hurdle, showing some minor weakness from the higher levels. And the small cap is the next one, which is showing range bound actions earlier with the weak bias, currently showing some consolidation after a sharp upside moment of around 13, 14 sessions. So broader markets are looking weak at the higher levels, though Nifty has declined sharply over the last 3 sessions. But on that front, broader markets seems to have some outperformed the benchmark Nifty, showing a minor declines, but placed at the strong resistance. So one need to be cautious of long positions in mid cap, small cap stocks and micro cap stocks, because if broader market indices slip sharply from here onwards, then the good amount of correction is likely. So the sectorally, if you look at the sectors, the metal is looking weak. If you look at the healthcare was outperforming, currently moving in a range bound action, making an attempt to move up. And the next, oil and gas is looking weak. We have seen some rounding bottom type formation. After the consolidation, it has started to break below the consolidation moment, currently at place at the lower levels. One may expect further weakness in the oil and gas sector. And next, if you look at auto is also still weak. We have seen some range bound action. Automobile sector has failed to show a sizable upside bounce after moving above the support of 200 EMA. Again, came below 200 EMA. The chart pattern is looking negative for the automobile sector. We could see some weakness in major automobile stocks coming ahead. But the IT is the one resilient so far. It has been continuously moving up. Even though last 2-3 sessions we have seen some high volatility in the broader market, but IT has sustained with minor consolidation, currently placed at the higher levels. So IT is clearly outperforming the benchmark and the broader markets indices. We could see some good traction in some of the leading IT stocks ahead. So friends, next one is the metal one. As I discussed, metal is looking weak. We have seen some sharp decline from the lower tops, lower bottoms, recent lower tops formations, and chartically lower tops and lower bottoms is indicating the weakness, the downtrend is in force. Currently placed at 200 EMA. I'm expecting this to be broken on the lower side. And finally, we can look at the realty chart. Realty is the one, apart from IT, is continuously moving up. Even though placed at the higher levels, still there is no indication of any significant reversal pattern forming at the realty stocks. Many of the realty sector participants are looking positive. They are placed at the upside breakouts. I think after the consolidation, this is the one sector I'm expecting the further upside momentum. So these are the brief about the market, broader market indices and the sectors. Now, if you have any query, I request to place your query, and we are happy to resolve that query, address your query apart from the stock specific.
So participants, if you have any questions, you can put it in the Q&A section, and we'll try to answer chat section. We'll wait for a minute for the question queue to assemble. Meanwhile, Nagaraj, if you can talk about various indices lately, volatility which we have seen on the expiry day, like last Sensex expiry and the last Nifty expiry. What do you suggest? What should traders do on a high expiry, high volatility day?
Yes, recently we have seen some high expiries during the volatility, and tomorrow is the expiry. I'm expecting there is a volatile session in tomorrow's session, and since the market has been declining continuously, and I'm expecting that there will be a sell-on rise opportunity in tomorrow's session. But nevertheless, we could see some high swing movements on either side in tomorrow's expiry.
Okay, we have one question on Reliance. We cannot answer stock-specific queries, but Reliance is our one of the picks of the new year, and because of the certain businesses which were not doing that well, especially on the oil to chemical business, it has been underperforming. We hope that over the years, the earnings will again be robust back on the recovery of the cyclicality of some of the businesses, and because of that, we expect it to recover and perform. Bhavik is asking any view on the chemical sector. So chemicals have turned around due to cyclicality to the nature. The dumping which was happening from China is now is over. Most of the companies are actually expecting recovery in their margins. That may also start reflecting into the numbers from December, and many of them have done good amount of capex. And now, since the volume growth will come, we are expecting that next year could be a very good year for the chemical sector. So we recommend that we should continue to hold chemical stocks. Shreyas is asking about what is our view on pharma sector and private banks. Both sectors are actually the market leaders right now, Shreyas. From the earning side, from the number side, these two sectors have given best numbers in the second quarters, and the valuation on the private bank side is relatively cheaper compared to their history. So we expect private sector banks to outperform. Pharma has been outperforming. Their numbers have never deteriorated and they continue to do well. Is there any specific reason for the market are falling? Because of the supply from the foreign institutional investors mainly? They are sellers in the cash market. The flow of the domestic institutional investors have also slowed down. And earlier, what was happening? There was a lot of demand from SIP money, from domestic money, but supply was not there. Nowadays, we are seeing that the lot of IPOs are there, which is taking money away from the secondary market into IPO. Lot of QIP, lot of private equity investors are actually selling equity, and there is supply in the market, which is now meeting the demand, and that's why we are seeing that the markets are range bound. So till this supply is there, which is in the form of QIPs, new IPOs, and also OFS, markets are unlikely to rise that much. Once the supply dries down and demand improves on back of higher earnings, then only market will break out of this zone. Mind you, last quarter numbers, GDP numbers and the quarterly numbers were not that great, and that means many new investors are very cautious in putting in money, and that's why we are seeing that the markets are range bound. We hope that the post-December quarter, once the numbers improve and the economic growth kicks in, that should actually help market to break out of this range, and then in the first quarter of January to March, we should see some kind of market bottoming out and then start moving higher post earnings getting reflected into the numbers. And once we have the uncertainty regarding the Trump presidency, which is getting over, we will have budget, which is on the 1st February. All these things, once we are over with these events, I'm expecting market to bottom out and then start recovering in the April to June quarter. I think that is enough for the day. We have answered most of the question. If you have any question, you can always get in touch with us, and we'll be more than happy to answer your questions. Thank you, Nagaraj. Thank you for joining. Thank you, everyone, and we'll close this webinar.